What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week. This watch list includes names like Netflix, Tesla, PG, which is Procter & Gamble, Google, and NVDA. We're going to give you all the resistance and support points that you need to trade these stocks, which will give you price targets and stop loss points so you know exactly what strategy we plan on taking them, where we plan on taking profits, and where we plan on cutting losses. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles. We always like to start off with the macro chart because it gives us an idea of where the overall market is trading. So right now we could see that last week we pulled back to our 10-day moving average. However, we managed to maintain above that level by the end of the week. So you can see that although we came down to 410, by the end of the day on Friday, buyers were able to come back and bring it back up to close above this blue line, which is the 10-day moving average. So last week, a couple of things happened, primarily earnings from companies like Tesla and Netflix, both of them missing their revenue estimates and lowering their forward guidance. So Tesla, that could be blamed on price cuts on a lot of their cars. And when you see lowered guidance, anytime you see that, the market will usually react poorly. So after these companies missed their revenue and lowered their guidance, we can see that the market did pull back last week. However, even through the pullback, it was not able to break the 410 support, which is why 410 is going to be our most critical support to watch to start this week. So if the SPY, or the S&P 500 in this case, breaks below 410, then we can expect a sell-off towards 408 and even 406. Now 406 is another very critical support because we could see that back in the beginning of April, we bounced at this support 3 times. So every time we bounce at a support and move up, that support becomes more and more reinforced. And the fact that we bounced at it 3 times means that 406 is a very critical support. So if we break below 410, which we managed to defend once, twice, and 3 times in the last 2 weeks, then we can sell off towards 406, which is even a more critical support. So what can cause something like this to happen? It's going to be earnings from companies like Google, Amazon, Apple, Microsoft, and Meta. So this week is probably the busiest earnings week of the quarter for the market because you're getting these major tech companies that pretty much hold down the market. They're going to be reporting earnings, and if they miss on revenue, obviously we know the trend now from last week when Netflix and Tesla missed on their revenues. So these companies are the backbone of the market, and their direction is going to influence the entire tech sector. In fact, it will probably influence the entire market. Apart from those earnings, we also have our first quarter GDP estimate, which is going to be an influential report, but not necessarily going to be a very strong driver of what could happen. We also have the consumer sentiment report and the personal consumption expenditure, or the PCE report. Now, the PCE report this week, that's going to be a report that the Federal Reserve pays attention to because they like to gauge the status of inflation using that report. So inflation has been coming down month over month, and if this report shows that inflation is coming down, it can help the market move in a positive way. But the primary thing on watch this week is going to be the earnings from these companies here. So apart from SPY's short-term candles, we can see, as we mentioned, that it's the 10-day moving average that's holding us on the daily candles. So if you are a bull this week or if you are a bear, you're going to be paying attention to this blue line. If we open and close below it, that means we could be falling back to the 20-day moving average, which is right around the 408 support that we talked about here briefly. Now, zooming out on the daily candle for SPY, we can see that back in the beginning of March, we are still holding above the trend line that we bounced at. So we can see that this was the trend line that was carrying us down for the last year or so. And then finally we broke above it in the beginning of 2023, came back to retest it and bounced up. So we're either going to double top and move right back down here this is going to take weeks to months for us to move back down, or we're going to break out of this 420 resistance and we're going to push higher. So if you're looking for a breakout, you're going to be looking at a breakout at 412.70 to start, and then 413.70 all the way to 416.06. After 416.06, we can see a very dramatic breakout above the 420 mark, and that could take us towards a price target of 425 to 430. So we are still bullish on the market as long as it's trading above this blue line. But as we mentioned, earnings report is going to be very critical this week, and they're likely going to make or break us. Now, moving on to our watch list, Let's go ahead and start with Netflix. We're going to first talk about everything on the daily candles, and then we're going to transition into the shorter term candles. So Netflix, we could see, has fallen back below the 10, 20, and 50-day moving average. It tried to close above the 50-day moving average on Friday, and it closed just above it. So if you are bullish this week, then you're going to want a stock to open above this yellow line, which is this 50-day moving average. Let's talk about Netflix on the shorter term candles and see what the levels are giving us. So if you are trading Netflix, it's actually a very, very easy chart to see. We have a high at 331.60, which was the resistance we got rejected at on the 20th of the month. If we break above that resistance, then our price target on Netflix is going to be anywhere between 338 to 340. Now, Netflix did miss on revenue, but their earnings did come in pretty good. So although the stock dropped, they still performed pretty well for the quarter, and they have a very strong chance of pushing back up. So look for that breakout and look for a price target to take profits around 338 to 340. If you are bearish on the stock, or if Netflix goes down in sympathy of other earnings, then we can see a break below 319.50. If the stock breaks below that level, then your price targets are going to be 316 and 312. So if you don't know how we trade before, when we have two price targets, we always like to take profits on half on the first price target and half on the second price target. If you're shorting the stock here, you're going to put a stop loss just above 319.50, because if the stock breaks below and you are shorting it or playing a put on it, you're going to want it to stay below 319.50. If it goes back above, then you just cut your losses and move on. Now, the next stock on our watch list is going to be Tesla. Tesla, unfortunately, had a very strong downturn last week after missing earnings, and they missed their net income estimates. So that is a very big deal, because Tesla is one of the companies that has been a backbone of the electric vehicle sector, and after they missed their earnings, a lot of other electric vehicle related stocks went down, and that is understandable because, generally speaking, as an automotive stock or an automotive company, it is very hard to turn profit and keep profit. Tesla has been an outlier because they're one of the companies that has succeeded at doing so. However, many times we find that automotive stocks tend to have a hard time keeping profits because there are so many moving parts and there's a lot of moving overhead. So with that being said, after Tesla missed earnings, a lot of EV stocks went down. Now Tesla came down and it bounced just above the 160 support. We can see that we bounced near this support before in the middle of March, and now we're right back at it, which means that 160 is going to be our primary support to watch going into this week. Now, anytime a stock moves down or gaps down on earnings, generally speaking, the stock continues to go down in the following weeks. So watch Tesla for a break below 160. If it breaks below that level, then you can see a price target of around 154 to 155 to start. And the second price target below 154 would be around 146 to 148. If you are bullish on Tesla, just understand that it is very high risk to play against the trend, because the trend is your friend. This is a very old saying in the market. So if you are betting for Tesla to go up, you want to position a little bit more carefully. You're going to want the stock to break above 170, and you're going to place a stop loss just below that point after you see that breakout success. So if it breaks above 170, then your second price target is going to be 184. Your first price target is going to be 176. So those are going to be the two price targets to take profits at. If the stock breaks below 160, then you're shorting the stock with a price target just above 160. Now, moving on to the next stock on our watch list, it's going to be PG, which is not usually the stock that we have on our watch list, but Procter & Gamble was one of the companies that reported earnings last week, and they reported positive earnings and beat expectations, which is a very good sign. And we love the fact that the stock gapped up on the earnings. So if you're not familiar with our earnings strategy, then perhaps you should check out our course or maybe join our group. We have links in the bio. Our earnings strategy is very, very successful because we wait for the stock to report earnings and then we play the stock. So Procter & Gamble reported earnings. The stock gapped up, which is very, very good news. So we placed it immediately on our watch list and we created some levels around it. So PG, in this case, gave us a very clean breakout. The stock gapped up and you can see it never moved below the gap up highs. And so now the stock is consolidating and it could be setting up for a higher move, or if it fails, we can play the downside too. So considering the stock beat earnings, and it's one of the only companies that beat earnings last week, then we can play an upside move if it breaks above 158. Now, price targets on Procter & Gamble are going to be a little bit more modest because this is a company that's not a high growth mover. It's not a Tesla, it's not an AMD, it's not an NVDA. This is a company that's been around a long time and they will move very slowly. Therefore, our price targets are very modest. So above 158, we're looking for a price target of only 160, and below 154, we're looking for a price target of 152. We are leaning bullish, however, we are flexible, which means that we are willing to change our mind and play whichever side that the market gives us. Because remember, folks, we are day traders. We're not trying to control the market, we're trying to play the market as it comes to us. Next stock on our watch list is going to be Google. Now, Google had a phenomenal breakout a few weeks ago. However, the stock has been beaten down a little bit over the last 5 or 6 days, primarily because of the unexpected tech earnings. And recently, Samsung phones are threatening to take away Google's automatic search feature and place Bing on there, which we don't really think is going to be a major impact to the stock. We do expect that to kind of fall off and the stock will continue to rally. We can see that Google is creating what's called a perfect cup and handle pattern, and it's consolidating just above the breakout and getting ready to push again. We are leaning bullish on Google. However, tech earnings this week are going to be major, especially Meta, because Meta is in the advertising space, and when Meta performs poorly in advertising, Google is likely to follow the same suit. So pay attention to Meta's earnings to figure out what could happen with Google. Now, Google, we are leaning more bullish in the coming quarter. However, it all depends on how the market decides to react to earnings in this week. So let's go ahead and talk about some levels for Google. First level we're going to watch for a breakout is going to be 109.20 for a price target of 112. Second price target would be around 114 to 115. If you are bearish on Google or if you're looking to play the downside, you're going to need a break below 103 for a price target of around 99 to 100. And below 99.70, things can get ugly because 100 is generally going to be a very strong psychological support for the stock. We can see looking back in the end of March, Google has bounced at that 100 support 1 time, 2 time, 3 time, and 4 time. So if we break below that 99.70 support or 100, we are likely going to see a very steep downfall towards 96. Now, which way it's going to go, we don't know. We just have to play it as it comes. Markets in general have been consolidating in a very tight range, making breakouts and breakdowns very, very inconsistent recently. And that's just because there's so much uncertainty in the market. So when you are trading, make sure you are paying attention to those moves, because if we're not getting those clean breakouts and breakdowns, then our price targets have to become more and more modest, and we have to learn how to take profits and cut losses more tightly. Now, last but not least, NVIDIA. Just like many other stocks on the market, NVIDIA has been range trading. It hasn't been really giving us a lot of upside or downside moves. It's just been consolidating in the very same range. Now, NVIDIA on the daily candles, we can see is back below the 10 and 20-day moving averages. Last time it came below those levels, the stock gapped back up. But now that it's back below them, it's actually a very bad sign. We can see that the stock pulled back and had a very strong selling day. You can see that volume, and you can see that red candle that took it back below the 10 and 20-day moving averages, and which means that if the stock is back below these levels and it's tested these levels 1, 2, 3, and 4 times, it is likely going to make its way down towards the 50-day moving average by earnings, which means that the price target on NVIDIA is actually going to be aggressively to the downside around 250 to 255. But looking at its shorter term levels, let's take a look. We can see that NVIDIA is setting up for either a break below 258.60, which will lead it slowly down towards 245, and then below 245, things can get pretty messy. Below 245, the stock can sell off more aggressively towards 233 and 223. Now, looking at NVIDIA's financials, we can see that the stock is currently trading at a price to earnings ratio of 155, which is approximately 9 to 10 times higher than a healthy company in its industry. So NVIDIA is quite overvalued right now. So if you are an investor or a trader, or if you're looking to get in, just keep that in mind. You don't really want to be betting for the stock to go up any further when this price to earnings ratio is extremely overvalued. So if you are betting on NVIDIA to go up and you want some short-term price targets, then you're going to need to price target above 282.50, right around 290. But our upside bets on NVIDIA are getting smaller and smaller only because the stock is considered so overvalued. So, thank you guys for checking in. I hope you found this video helpful and best of luck trading this week. Remember, earnings week is a very, very uncertain time for the market. So, if things don't go your way or if you're not understanding what's happening on the chart, then maybe just sit on the sidelines and wait for another week to pass. It doesn't hurt to do so. Not every day is a trading day on the market. Thank you so much.